Chris Zaccarelli of Independent Advisors joining us from Charlotte. Chris, we're talking about credit. We're talking about the plunges that we saw today. Where is the biggest risk going forward? Investment grade, high yield, government debt?
Well, I think right now, given those choices, I'd say you still have some risk in the high yield markets. I mean, clearly spreads are blowing out. I think we were around 740 across the whole high yield complex, but that's skewed, of course, because of what you're seeing in the energy sector. So I still think high yield is where the risk is. Clearly today, you saw a lot of investors taking a look at those triple Bs and saying, well, what if those get downgraded to double B? And clearly that's what we're looking at. I think today was just the start of that repricing and people getting a little bit ahead of it. I think the Barclays Ag had probably the biggest drop in many years, and it reflects all of those pricing discontinuities that you were just mentioning.
Chris, I'm trying to frame today's concern, today's action in the market. Was this a case of investors taking a step back and expecting a mass of defaults, or was today fire sales? Was this a technical unwind of a lot of trade that is just basically coming out and prices plummeting?
I mean, at this point, I feel like people are moving ahead of what may happen. Again, the demand shock hasn't exactly happened yet. I mean, it's just the beginning of the demand shock. Everyone is racing ahead to try to figure out exactly how big that demand shock will be, whether that's in equities, whether that's in fixed income. And so for now, I would say it's more fire sales. It's more people, shooting first, asking questions later. It's hard to know exactly what those default scenarios will be because we don't know how long this demand shock will last and exactly how far and wide, the virus will really permeate our society. But clearly with all of these events being canceled, whether it's the Final Four tournament, NBA season being canceled, et cetera, it is now reaching a level of consciousness in society. And we're now starting to see some of the things that the bond market was worrying about 6 weeks ago and the stock market started worrying about maybe in the last week or two.
Chris Zaccarelli, great to catch up.